Moko has the perfect business idea, a premium banana smoothie stand that could make him rich. There's just one tiny issue. He's completely broke, 0 leaves. So he comes up with a plan that changes everything. Well, 2 plans, but the first one sends him straight to jail. Plan A? Rob the jungle central bank. Yeah, not Moko's brightest moment. Security caught him in 4 minutes. Sitting in that cell, he realizes he needs a legal way to get startup money. His cellmate, a business monkey, introduces him to something magical: equity financing. After bail, Moko goes to wealthy monkeys with his business plan. He says, "Give me 10,000 leaves, and you'll own 25% of my company." The investors think, and 3 of them agree. They just bought stock pieces of ownership in Moko's Smoothie Co. Just like that, Moko becomes a founder with shareholders. Most new entrepreneurs mess this part up. Moko's friend Bobo got investor money and immediately bought a sports car. His startup died in 3 months. Moko? He buys industrial blenders, premium banana trees, and a prime stand location. 6 months later, he's earning 2,000 leaves a month in profit. His investors own 25%, so they also get 25% of the profits. 500 leaves a month split between them. These payments are called dividends. Moko wins. Investors win. That's the whole point of stocks. Companies grow, investors earn. Quick clarification because everyone mixes these up. Moko issues stock, the whole ownership category. But that stock is split into shares, individual units. Think of the banana tree as the stock, and the bananas as the shares. More shares you own, more of the company you control. Not all stocks are the same. Big Banana Corp has been around forever. Slow, steady, reliable dividends. These are blue chip stocks. Then there's Tiny Tim's experimental fruit lab. High risk, huge potential, or total crash. That's a penny stock. Most investors own both. Safety plus excitement. Bananaland retaliates with tariffs on Monkeyland's coconuts. Monkeyland hits pineapple. Bananaland hits tools. Back and forth? This is a trade war. Prices explode. Everyone suffers. It's a warfare. Okay, no. It's buying single stocks is risky. If Moko's company fails, you lose everything. Smart investors buy funds, baskets containing many companies. If one fails, the others protect you. It's literally the opposite of putting all your bananas in one basket. The most famous fund? The Jungle 500. In our world, the S&P 500. It includes the 500 biggest, strongest companies across every industry. Anyone can invest in it. You're basically betting on the entire jungle economy. Historically, it grows about 10% per year. That's why experts recommend it for beginners, unless politicians interfere, which never ends well. Then there are hedge funds, the VIP section of investing. Aggressive strategies, huge risks, huge rewards. But entry costs? Minimum 100,000 leaves. Unless you're already wealthy, forget they exist. So why does Moko's stock jump from 10 leaves to 15 or drop to 5? Because markets are emotional. High demand pushes prices up. Good earnings, up. Exciting news, up. Banana shortages, scandals, bad economy, down. Millions of monkeys making emotional decisions create the market. Before you invest a single leaf, pause. This is educational entertainment, not financial advice. Moko isn't licensed, and neither am I. If this demystified the stock market for you, hit that like button and subscribe. Next episode, Moko discovers something strange suddenly. His imported bananas cost twice as much, and his government is pocketing the difference. We're diving into tariffs and why countries play these economic games. You won't believe what happened in the real banana war of 1993.